Hello, good morning, everyone, and welcome to the start of the 2 weeks live trading session. As usual, we'll be having a session at least 3 times a day, morning, afternoon, and evening, and also some specially arranged sessions during reports of high importance. As usual, like I said, do register for all the sessions, but you don't have to attend all of them. You just attend the ones you can attend, but all the sessions will be recorded and you'll be sent a link to view the recording. I also do take this opportunity during the sessions to ask as many questions as you want and take full advantage of the sessions, asking questions regarding trading, your platform, any issues you have. And as usual, you can do so by clicking the hand button on your control panel or sending your questions through the question box. As usual, the main market we'll be focusing on is the Euro-US dollar. That's the main market we'll be focusing on. But after we've analyzed the Euro-US dollar, you can then, if you're trading any other markets that you want us to look at, then do let me know afterwards, again, by clicking the hand button or sending your questions or comments through to the question box regarding all the markets. Okay, so we're going to kick off, and as usual, we're just going to go through our trading plan, and that consists of us starting off by looking at the economic calendar to see if there are any reports of high importance due out that could affect the market we're trading, which is the Euro-US dollar. So since we're trading the Euro-US dollar, we're looking for reports due out today that could affect the Euro or the US dollar. Also, it's good practice when you start trading for the week. Excuse me. It's good practice when you start trading for the week to just have a rough idea what reports of high importance are coming out for the whole week. Because obviously if there are reports of high importance such as interest rate decisions and unemployment figures, especially due out from America, the markets could just trend sideways for the whole week up until that report. So it's just good to have an idea, just have a good look through the whole week on a Monday, just to see what's coming up the rest of the days of the week. So we just have a quick flash through the whole week just to see if there's anything major coming up, in the coming days. So that's Monday, 10th of August. Like I said, we're just going to have a quick look through the whole week. So that's Tuesday, 11th, tomorrow. That's a report of high importance, but it's nothing major in terms of interest rates, unemployment, or GDP or CPI. That's Wednesday. That's Thursday. Again, that's advanced retail sales, so nothing really major. Friday, that's the German GDP. That one really, and Eurozone GDP. Okay, so nothing really major to stop us going through each day. Usually there are major reports out of US that can tend to cause the market to trend sideways the whole week, pending that report at the later part of the week. But not these ones, not the ones from Europe or Germany. Okay, so it's just a good idea just to see what's coming up for the rest of the week. Like I said, the ones I really watch out for are the interest rate decisions due out from US. They're really the US major reports from the US because that's the ones that tends to shake the whole markets. So if I see there's a US interest rate coming out on a Wednesday or US CPI report on a Thursday or US unemployment rate on a Friday, then I will be careful trading the markets leading up to those reports. But this week, nothing major, so we'll just go straight to today. So I'll just click on today. So let's just focus on today. So today, Monday, so we saw it's just some reports out from China, and they've come and gone, but of no concern to us with the Euro US dollar. Uh, so we're looking for reports that would affect the Euro US dollar. So at 9:30 here, we have a report of medium importance, the Eurozone Centex Investor Confidence. So that's at 9:30. That's a report of medium importance, and that report in particular won't stop me looking for opportunities to trade. At 3 o'clock, we have the US Labor Market Conditions Index change. That's another report of medium importance, but again, that's another report that will not stop me trading. So today, there are really no reports of high importance and no reports of medium importance of significance. So today is just a good day to trade. Nothing's going to stop us trading or looking for opportunities to trade today from an economic report point of view. So we can. So we'll just go ahead and look for opportunities in the market. But another thing just to bring up, since we're starting from the beginning of the 2 weeks live trading session, another thing obviously is to remind you about the marketwatch.com. Just to see if there are any reports of major importance in the financial news. So again, obviously as a trader, it's always good to know what's happening in the financial markets. As we've known over the last couple of months with the Greek issue, which had been dominating the markets, but less so now. I think the markets have really factored in the issue with Greece, and it's no more a major problem in the markets because it just gone on for so long. Everybody knows everything now about Greece and the situation and the pros and cons and what could happen or not happen and the impact. So it's all been factored in now, and it's not really a major problem as regards to financial markets. But again, it's always good to know what's going on in the financial markets, and the marketwatch.com website is a good website that gives you up-to-date financial news. So again, don't forget that. Just always keep an eye what's going on, which you can tell by just looking at the major headlines on this website. Obviously, any headline that catches your fancy, you can click on it and check details about that report. But from a currency trading point of view, there's really nothing major going on at the moment. Obviously, as you know, with news, things can change, so you keep an eye on that. Okay, so no real major news to concern us at the moment, and no major reports today to concern us at the moment. So we can just go ahead and trade the markets. So we'll just go to the Euro US dollar, and we're going to start with the daily time frame. We're going to start with the daily time frame. So looking at the daily time frame, we can see that obviously since July last year, so since July last year, the Euro US dollar had been trending sideways. This is the daily time frame, so we're looking at the overall picture of the Euro US dollar. We're going to start the 2 weeks by just having an idea what is the overall picture of the Euro US dollar, what's the overall pattern of the Euro US dollar before we go to our day trading. So we first need to look at the overall pattern since we're just starting off today. Today is the first day of the live trading sessions. So looking at the overall picture, which is a good thing to do as a trader, we can see that since July last year, the market has just been trending down, and you can see it's been extremely bearish. It's just been going down, and it got to that point. You can see where it broke the moving average on the upward side, and then it's then been trending sideways since then. Obviously, we've been aware about that because we got caught up in that sideways trend during the last 2 week session about 2 months ago. So I'll just expand this a bit so we can just look at this in more detail. So we can see where it broke the moving average 50. It broke that on the 27th of April this year. So it broke that on the 27th of April, and the market went up from the high there, went down from the low, then went up again from the high point. So that's a higher high, went down from the low, that's a higher low, then it went up again from the high, that was higher than the previous high, so that was another higher high. Well, at that point, it went down and formed the low, which was lower than the previous one, so it was no longer uptrending. Then it went down went up from the high, went down from the low, and then went up again from the high, but that low wasn't lower than that previous low, so it wasn't downtrending. And it's gone up from the high, a low, and then you can see basically since then has been forming higher highs and higher lows, or lower lows and lower highs. So basically you can see that the market has just been trending sideways since about the 15th of May when it formed that last high point, and since that it hasn't formed another low. So the market hasn't gone higher than that from the 15th of May or lower than that since the 27th of May. It's just been trending sideways. And obviously the reason why it's obviously been trending sideways, as we all know, is the Greek situation. So I'm just going to mark out this daily time frame sideways trend. So the highest point there is 1466. So that's 1466. And this could put the high of sideways trend on daily chart. That's high or sideways trend on daily chart. I'll just copy that for now. Just look for, let's see, what color should I use? I usually use white for my day trading sideways trend. Let's see. Let's go for lime green. Use lime green. And there we go. So that's the higher point, and then let's see which is lower of these 2 points. So that low there is 0818, and that low is 0807. So I'll go with 0807, the lowest point. 0807. 0807. 0807. There we go. And now with the low of the sideways trend on the daily chart. There we go. So obviously we can now see clearly where the market is trending sideways on a daily time frame. So obviously from a swing trading point of view, we can't use the moving average to swing trade because we don't want to trade within this sideways trend. So until this sideways trend is broken, from a daily time frame point of view, there are no swing trading opportunities. So you're not going to use this moving average because you can see it's within that sideways trend of the daily time frame, and you can see the market crisscrossing the sideways trend. Also, the importance of this sideways trend on the daily time frame also tells us, as a day trader, from a day trading point of view, we need to be careful with our day trading. We need to not overtrade, obviously, because the market is currently trending. The overall trend of the market is a sideways trend, the overall trend. So that means we need to be extremely cautious trading this market until this sideways trend is broken. So that's the importance of having an overall picture of the market you're trading, because that will also give you an idea of what to do from a day trading point of view, and obviously from a swing trading point of view. So from a swing trading point of view, there's no opportunity to swing trade at the moment because the moving average is within that sideways trend. And from a day trading point of view, what you're going to do now, we need to be careful and we need to approach the market with extreme caution and not overtrade. We're probably just going to be having one, maximum two attempts at the market until this sideways trend is broken. And even those one or two attempts we're going to be having on the Euro US dollar, we're going to be extremely cautious and careful the way we trade. So that's the overall picture of the Euro US dollar. So let's go to our day trading. So go to the 5-minute time frame, which is the one I use for day trading. So this was the daily time frame. So let's go to the let's start with the trend from today. So we can see here again, when you're looking at the trend from the first time, it's always good to start from the previous day. At least look at over 2 days, because you want to see what the trend has been like. Obviously, if you're not sure, you might need to go further back and see what the trend was like. But we can see it here. This was from Friday when the US unemployment report came out. So when the US unemployment report came out, there was a sharp fall in the Euro US dollar. Got to that low point, and then it shot up and went back straight back up and formed a high there and a low, and then went up from another high. That high was higher than that previous high, then the low. That low was higher than that previous low. Then it went back up again from the high point. That high was higher than that previous high, so it's forming higher highs. And that low was higher than the previous low. So you can see it's been forming higher highs and higher lows. But at that low point, it's formed another low there and then went up. It didn't break that previous high. So at that point, this market was no longer trending up. And it formed a low there, then a high, and just about a low there, then a high and a low. But it went back up, formed a low that was higher than that one, so it was no longer going down. But you can see basically it's just been trending sideways. It's not been really going down or going up. So we can say that all this now is trending sideways. So that's the highest point so far of the sideways trend there, that high. That's where the highest has gone to. And thus it hasn't gone higher than that since. So that high there is 1.09778. So we'll just round that up to 1.0978. So 1.0978. So 1.0978. So just put that's the high. And again, make that white because the lines are usually white for my day trading sideways trend. And then that's obviously the lowest point there. So the low there is 1.0949. 0949. So that's low. So there we have it. So that's the current sideways trend of the market. So you can see it's not making clear higher highs and higher lows, or lower lows and lower highs. You can also see the moving average from that short uptrend. You can see the moving average too has been flat. So those are two signs that the market is trending sideways. One, it's not making higher highs and higher lows, or lower lows and lower highs. And two, you can see the moving average is just more or less flat. So we've got two reasons, or two confirmatory reasons why the market is trending sideways. And we've marked out the sideways trend. So that's the highest point of the sideways trend. And that's the lowest point of the sideways trend. So obviously we want to avoid trading within this sideways trend. So we don't want to trade within this sideways trend. We're going to avoid trading within the sideways trend. But you can see luckily the first resistance and the pivot point are both outside, way outside the sideways trend. So from a trading point of view, obviously if the market goes up, breaks this sideways trend, goes up and then breaks the first resistance, I'll be happy to buy just above the first resistance. So you can see I've already got a pending buy order just above the first resistance. Obviously, if the market falls first, breaks the low point of the sideways trend, and then breaks the pivot point, I'll then be happy to sell below the pivot point. So you can see I've got a pending sell order below the pivot point and a pending buy order just above the first resistance. And again, because of what's going on overall with the market, I'm only going to have one attempt at the market today. So if the market falls first and takes my sell order below the pivot point, I will delete my pending buy order and just focus on the sell order. And if I lose out on that trade, that will be the end of the trading for today. Just going to have one attempt in view of the overall sideways trend picture of the Euro-US dollar. Alternatively, if the market goes up first, breaks the first resistance, and takes my pending buy order, I'll delete the sell, concentrate on the buy. If I lose out on that, then that will be the end of the trading for today. So I'm just going to have one attempt at the market today for the reasons I stated earlier. But we'll still meet again at 12 noon and just have a look at the market again and see what's been happening. And again, over the 2 weeks, we'll try as much as possible to update the Twitter page with any changes that I might make during the 2 weeks in between the sessions. So you can also check the Twitter for any updates in between the trading session over the 2 weeks trading sessions. Okay, so that's the plan for today, and most importantly, the logic and the rationale behind the plan for today. So any questions? If you have any questions, do click the hand button or send your questions or comments through to the question box. Any questions, comments? Oh, we're all good. We're all clear. Brilliant. So we can all go for breakfast and have the most important meal of the day. Okay. So if there are no questions, I wish you all a very good morning. Look after your trades. We'll meet again at 12 noon. And of course, you get the link to view the recording from this morning's session. And like I said, you can also follow me on our Twitter page for any updates in between the sessions. So have a good morning, take care, and we'll speak again at 12 noon.